Financial reporting. How many chapters we have covered so far? Eight, 9, 10, 11. I'm holding for a few days. So let's discuss chapter 12. That is based on leases. A little bit technical and complicated chapter. Complication in terms of calculation. But let's see how we can handle this journey. Leases. Few years back, there was some standard on leases. And according to that standard, like few years back, according to that standard, there were two types of leases. One is called finance lease and other is called operating lease. Finance lease and operating lease. Before moving to finance lease, operating lease, what is lease? Lease where one party whose name is lessor, I can say party A, has a transfer its asset with the right to use to another party called lessee, mean party B. Mean A has given his asset to B with the right to use, mean who will use the asset? B. And B will make a payment for the use of the asset. B will make payment for the use of the asset. So this is called lease. A similar like a rent agreement. Lease is similar like rent agreement. Rent agreement, like we have rented a house. If we are just using the house and we are paying just the rental, like per month rent we are paying, so that is rent expense. But if we are using the house as well as we gonna buy that house after a certain time period, and we are making a payment for the house cost as well, so that is called leases. Mean where a party lessor has transferred his asset to B with the right of use. Mean who is having the right of the asset? Now B is having right of asset. And after a certain time, that asset will be completely in the ownership of whom? Lessee. So that is called lease. The person who is transferring asset is called lessor. And the person who is receiving asset, that is called lessee. Who will make payment? Lessee. To whom? Lessor. Who will make payment? Lessee. To whom? Lessor. Lessor mean the first owner of the asset. Lessee to whom ownership is going to be transferred. So can you understand what is lease? Okay. So a few years back, there were two types of lease, finance lease and operating lease. What was finance lease? Where lessor has transferred the asset to lessee, and lessee is having the right of the asset. Lessee is having risk and reward relating to the asset. A risk and reward will be transferred to the lessee after a certain time period that will be called finance lease. Mean after a certain time period, the asset will be in ownership of lessee. Mean lessee will be having risk and reward relating to the asset. Risk and reward mean ownership of the asset. Mean ownership will be transferred to the lessee after a certain time period that was called finance lease. What is operating lease? Where risk and reward will remain with the lessor. Mean ownership title will not be transferred to the lessee, that was operating lease. Like simple rental agreement, we are just paying rent for the use of the asset, and after a certain period, the asset will be in ownership of lessor. Mean will remain in lessor ownership. Mean risk and reward ownership will not be transferred to the lessee. What was the accounting treatment of finance lease? In case of finance lease, we need to record asset in the balance sheet. We need to record lease liability in the balance sheet. We need to record, if we have recorded asset, we need to record depreciation in statement of profit and loss account. And we need to record interest in statement of profit and loss. In case of finance lease, there are 4 accounting that we need to make in our book. Whose book? Lessee. We need to record asset. We need to record lease liability. If we have recorded asset, that should be depreciated over its useful life. Mean we need to depreciate the asset, where depreciation expense we charge, profit and loss account, and we need to record interest in the profit and loss account. In case of operating lease, there will be only one accounting. That will be what? Only rent expense, or you can say interest expense, where in profit and loss account. Because the asset will not be transferred to our ownership. We are just using the asset. Whose asset? Lessor asset. It will remain in ownership of lessor. We are what paying? We are just paying rent. So in financial statements, we need to just show the rent expense only, where in statement of profit and loss account.
What kind of interest lessee you really?
The rent you are, the rent you are paying. Or if you are using any asset, like you are using any car, so against that car, whatever the amount you are paying to the lessor, so that is called rental expense or interest expense. Is it fine? Now, this standard has been changed. Now, this finance lease name is changed to long-term lease. This operating lease word is eliminated. This is called short-term lease. Long-term lease means lease for more than 1 year. Short-term lease means lease for less than 1 year. Even if you are using asset of lessor and the ownership of asset will not be transferred to your name, you need to account for these 4 things. Any lease that is more than 1 year, mean more than 12 months, you need to account for accounting. You need to record the asset, you need to record the liability, you need to depreciate the asset, and you need to charge interest. Any lease less than 1 year, that will be called short-term lease, and for that there will be only one accounting. What is that? Rental expense. So why I have explained what is finance lease, what is operating lease. Suppose after qualifying ACCA, you are in discussion with some old people who have qualified it so many years before, and they are discussing finance lease, operating lease. So you should know about it. What is finance lease? What is operating lease? Now these terms have been eliminated, but still old qualified people are using these terms, finance lease and operating lease. Okay, so what is a lease? Lease is an agreement between 2 parties, lessor and lessee, where lessor has transferred the right to use of asset. What he has transferred? Right to use of asset to the lessee for a certain time period. And lessee need to make the payment to whom? To the lessor within that time period. And after that time period expired, the asset might be transferred to the lessee, mean might be in the ownership of lessee. Okay, let's read something. The first half an hour, the things might not be adjusted in your mind fully. So be patient. When we'll move towards questions, so by practicing more and more questions, the things will gonna clear easily. So what is lease? A lease is a contract agreement or part of contract that conveys the right to use of an asset. The lessor have transferred right to use of an asset, that underlying asset for a period of time in exchange for consideration. Consideration means lessee will pay the amount and lessor have transferred the right to use asset. A lessor, who is lessor? Entity that provide the right to use an underlying asset in exchange for consideration mean who is transferring the asset. Lessee, who is receiving the asset. Entity, could be person, could be company. Entity that obtains the right to use an underlying asset in exchange for consideration. The right to use word is used for asset. In lease, the word right to use mean asset. A right of use asset represents the lessee's right to use an underlying asset for the lease time period. What are the basic principles? At the commencement of the lease, the lessee should recognize a lease liability and a right of use of asset, mean he need to record the asset as well as he need to record the liability. If you have recorded the liability, you need to record interest on liability in profit and loss account. If you have recorded right of use asset, so you need to depreciate that asset as well. Is that fine? What will be the accounting entry? Debit, asset, credit, lease liability, and credit cash. What does that mean? Payment in cash. If you have paid anything in advance, so cash going out. If you haven't paid anything in advance, so the accounting entry will be asset, debit, lease liability, credit. Is it fine? Mean you have paid 100,000 in advance, remaining in 900,000 you need to pay in future. So the asset will be debited with 1 million. Lease liability, the remaining amount that you need to pay 900,000, and cash 100,000 that you have paid in advance. And this will be what? But this is not that much simple, because this lease liability amount you need to calculate using a present value method. How? We're gonna discuss later. The simple accounting entry is asset debit, lease liability credit, and cash credit, whatever you have paid in advance. But this lease liability, we need to calculate using present value method. Present value method means what will be the future payment along with the interest. We need to discount that amount for the number of years. How we're gonna discuss later. Includes the interest. It includes the interest amount as well. Okay. So initial measurement, the liability, mean lease liability. The lease liability is initially measured at the present value of the lease payments that have not yet been paid. Mean lease liability, we need to calculate using present value method. Lease payments should include any of the following: fixed payments, amounts expected to be payable under residual value guarantee. What does that mean? amount expected to be payable under residual value guarantee. In after completion of the lease time period, if there is any guarantee, this asset can be sold at say 20,000. So that is what residual value. So that will also be part of the liability. Can you explain? Like we are having agreement for using the asset for 5 years. Suppose asset life is 5 years, but we have provided guarantee like after 5 years, this asset can be sell at 20,000. That is the residual value, scrap value. If there is any guarantee, yes, this asset can be sell at 20,000. You can receive extra 20,000 from this. So that will also be part of liability calculation. How we will discuss later on during question. So let's see. Exactly. Option to purchase the asset that are reasonably certain to be exercised. Mean either you will purchase the asset after completion of the time period or will not purchase. So that will also be part of calculation. Termination penalties if the lease term reflect the expectation that these will be incurred, like if you terminate the lease agreement, what could be the penalties? If there are any penalties relating to agreement, that should also be part of calculation. That should also be part of calculation. Okay, and how we should discount using the discount factor. If discount factor is given in the question, we will apply the discount factor. If discount factor is not given in the question, then we will apply the borrowing rate. Borrowing rate means if lessee can borrow from bank that amount of the asset, what interest rate he will pay. So that will be used as discount factor. So the discount rate applied should be the rate implicit the lease. If this cannot be determined, then the entity should use its incremental borrowing rate. Mean if discount rate is not given, we will use borrowing rate, mean interest rate, the rate at which it could borrow funds to purchase a similar asset. Means suppose if lessee need asset on lease basis and discount factor is not given, what is the amount of the lease? If we borrow that amount from the bank, what bank will charge as interest rate, so that will be used as discount factor. And this will be given in the question, either discount factor, either interest rate will be given in the question. Now we are moving towards the right of use, mean how asset value can be determined. So in simple, the lease liability amount we need to calculate using present value method. How asset amount can be calculated. The right of use asset is initially recognized at cost. The initial cost of the right of use asset comprise, mean what should be part of asset value, amount of initial measurement of the lease liability. In our case, 900,000 was lease liability. Any lease payment made at or before the commencement date, mean initially that we have paid in advance, that will also be part of asset cost. Like we have paid 100,000 and remaining 900,000 we need to pay. So that 900,000 is this point and that 100,000 we have paid is advance. So both should be part of asset, not liability. That advance will not be part of lease liability. Liability means the amount we need to pay in future. Whatever has been paid already, that will not be part of lease liability. Any initial direct cost, mean if you have paid any direct expenses, like you have paid any legal fee, you have paid any administration fee, you have paid any commission for arranging this lease facility, so that will also be part of asset cost. Estimated cost of removing or dismantling the underlying asset as part of condition of the lease. Mean if you are using any machine, you are taking a machine on a lease that you're gonna install somewhere for 5 years, and after 5 years, you need to remove that machine where you have installed. And after removing, there will be some disturbance on land that you need to repair. So that cost will also be part of asset cost, dismantling cost. So lease liability cost plus any advances plus initial direct cost and plus dismantling cost. Any incentive payment received by a lessee are deducted from the initial value of the right of use asset. And if there is any incentive that you have received from some party, from government, so that will be deducted from the asset value. So lease liability cost plus advance plus direct cost plus dismantling cost less incentive received. What is the lease term? Lease term, the period for which you are getting right of use of the asset. That is called the lease time period. Mean you are using asset for 5 years, you are using asset for 10 years, so that will be called lease time period. So to calculate the initial value of the liability, mean for how many years we need to discount the liability, mean we need to calculate present value for how many years. So that is called a lease time period, lease term. Right of use asset, the lessee may consider the length of the lease term. The lease term comprise non-cancelable period. In the period for which you are getting asset on lease that will not be cancelled because you are signing a contract with the lessor. So you cannot make breach of that contract. If you are obtaining asset for 5 year use, so that is non-cancelable period because everything will be written in lease contract. Period covered by an option to extend the lease if reasonably certain to be exercised. Mean you are getting asset on lease for 3 years. And there is option, if you want, you can extend the lead to 5 years. Mean 2 extra years. So that is what extended time period. And if that extended time period meeting the condition reasonably certain to be exercised, mean there are more chances you will extend the lease, then the lease time period will be considered 5 years. 3 plus 2 is extended. If the extended time period is not reasonably certain, then the lease time period will be considered 3 years. Initially, you have made a contract, signed a contract for 3 year lease. Lessor has provided you some option, like you can further extend the lease for 2 more years. And if there are high chances you will extend, then the lease time period will be 5 years. Mean initial, non-cancelable plus extended time. If there are less chances you will get that extended time period option, then the lease time period will be considered 3 years. Period covered by an option to terminate the lease if these are reasonably certain not to be exercised. Mean you have signed a contract for 5 year lease and lessor has provided you option. If you want, you can terminate after 3 years as well. In that case, if it is certain, in that case, the lease time period will be considered 3 years. That's your understanding one.
So they are gonna make new contract.
No, the same contract, there is option in the contract. Test your understanding one. On 1st January 2021, Dynamic entered into a 2 year lease for a lorry. The contract contains an option to extend these lease term for a further 1 year. In there is option, you can further extend for 1 year. Dynamic believes that it is reasonably certain to exercise this option, and there is certain to exercise this option. This means lease time period is of 3 years, not 2 years. I mean, we will make all the calculation based on 3 years time period. Lorries have a useful life of 10 years. Lease payments are 10,000 per year for the initial term. Initial mean 2 years. And 15,000 per year for the option period, that is 30 years. All payments are due at the end of year. To obtain the lease, Dynamic incurs initial direct cost of 3,000. That will not be part of a liability, but will be part of asset. The interest rate within the lease is not readily determinable. Dynamics incremental rate of borrowing is a 5%. And if discount factor is not given, we can use borrowing rate as a discount factor. Calculate the initial carrying amount of lease liability and the right of use asset, and provide the double entry needed to record these amounts in Dynamics initial record. You need to calculate the amount of lease liability, you need to calculate the amount of asset, and you need to pass accounting entry. So lease liability amount will be calculated using present value method. This means for how many years the lease time period is? Year 1, year 2, year 3. What are the amounts? In year 1, we will make payment of what? 10,000, 10,000, 15,000. And discount factor, that is 5%. How we can calculate amount of discount factor? 1 divided by 1 plus I. What is that? 5% means 0.5 raised to power 1. What is that? 1 divided by 1.05. 1 divided by 1.05. So that is 0.952. Just to explain it, because initial direct cost is 3,000. That has already been paid. That is part of asset, not part of liability. That will be part of asset, not part of liability. Any advance paid will be part of asset, not part of liability. So after calculating this on calculator, just put the equal to sign. You can get a discount factor for next year, and that is 0.907. Or you can calculate 1 divided by 1 plus 0.5 raised to power 2. And next, put equal to sign, you will get the discount factor for year 3, that is 0.864. 864.
Yes.
Is that? Now, if we multiply, we can calculate PV. 10,000 into 0.952. What's that? 9520.
Yes.
10,000 into 0.907 and 9070. And that is 8640. And if we add all together, what? No, it's 15,000. Sorry, it's 15,000. Yes. The last amount is 15,000. 15,000 into 0.864. 12,960. And what's the total?
31,550.
31,550. So 31,550 is the present value. And for this amount, we need to record the lease liability. For this amount, we need to record the lease liability. But in asset, the lease liability amount, in asset, the lease liability amount, any advance, any direct cost, any dismantling cost. In this question, we are having this lease liability amount and direct cost. So what will be the accounting entry? Debit right to use asset, credit lease liability. In balance sheet, we will record lease liability and credit what that we have paid already. Dynamic incur initial direct cost of 3,000. So that we have already paid as cash direct cost. That is 3,000. This one is 31550 and that will be 34550. Yeah, you can see. Is that fine? Okay, let's move forward. Subsequent measurement. We have discussed initial measurement. Now we are moving towards subsequent measurement. At year end. At start of the year, we will calculate lease liability using present value method. And normally, this figure will be given in the question. In a 95% question, the present value of lease liability figure will be given. Like in this question, it was given 10,000, 10,000, 15,000. So we need to calculate what is the present value of liability. But now onward, in 95% of the question, this figure will be given in the question. We just need to calculate the asset value only. Okay. So this was initial measurement. Now we are moving towards subsequent measurement. The liability. How liability at year end and coming year will be calculated. The carrying amount of lease liability is increased by interest charge. The year end liability, we need to calculate by adding the interest in initial present value. In that present value will be calculated at start of the year. But we need to record liability at end of the year in balance sheet. So in that amount, present value amount, we need to include the interest amount as well. Calculated as the outstanding liability multiplied by the discount rate of interest. The interest is also recorded in statement of profit and loss account, and the interest not only we need to add with the lease liability, we need to record in profit and loss account as expense as well. And the accounting entry for interest will be finance cost mean interest debit, lease liability credit as lease liability is a liability. So credit mean will be added, and this finance cost will be recorded in statement of profit and loss account as expense. Is that fine? And when will you make payment? We will make payment for the interest as well as cost of the asset. And both payments will combinedly paid. And while making payment, lease liability, debit and cash credit. And in this interest is already included because we added that interest where in lease liability. Instead, we are recording interest expense debit cash credit. What we are doing, instead of recording interest cash separate, we are recording cash payment of lease liability and interest combined. That's why we need to add interest to liability first And then while making payment, liability debit, it includes interest as well as cost of asset, and we are paying cash. To work out the interest and year-end liability, our lease liability table is used. In the first one, when we bought the asset, the asset to lease liability. Yeah. And that lease liability mean recorded as a liability mean at start of the year liability amount is this. Yeah. But at end of year, we need to add the amount of interest as well. Then we will record under non-current liability the liability amount. Mean initially we need to calculate lease liability using present value, but that is not recorded into the balance sheet. In balance sheet, when we prepare balance sheet at year end. So while preparing balance sheet, we need to add interest in that amount. Then we will record the amount in balance sheet. That initial amount we calculated for what? To know the asset value. See here. See here. Using this question, how every year we will record the lease. For asset, we have done. How every year we will record the lease. So we need to make 4 columns: balance plus interest minus payment, and then remaining balance. So this lease was for 3 years. Year 1, at start of the year, we will be having this amount 31550 opening balance. In that, we will charge interest. What is 5% of 31550? Can you calculate, please?
577.
1577. From this, we will deduct the payment. What was payment at year 1? 10,000. What is the remaining? 31550 plus 1577 less payment of 10,000. 23127. Mean at year end, at end of year 1, what is your remaining liability? That is 23127. Because at year end, you have made 10,000 payment. Your remaining liability 23127 that you need to pay in coming 2 years. In year 2, this 23127 will be the opening balance. In that, you will add the interest. What is 5% of 23127?
1156.
1156. And you will make payment of how much? 10,000. What is the remaining? What is the remaining? Just a moment. What is the remaining?
14283.
14283. Mean at year 2 end, this will be your liability. In year 3, the opening balance is 14283. What is the 5% of this amount?
714.
714, and you will make a payment of how much? 15,000. So at year 3, there will be nothing as a liability because you have made all the payments. Now see, at year 1, you will record this into the profit and loss account as expense. In year 2 profit and loss account, you will record this as interest expense. In year 3, you will record this amount as interest in profit and loss account. In year 1, you need to record the liability at year end. But this liability should be bifurcated into current and non-current liabilities. this amount will be recorded as a non-current liability in year one financial statement. Because this is the amount that you need to pay in more than 1 year. And the difference between these two amounts, what is the difference? 23127 less 14283.
844.
8844. This will be recorded as current liability that you need to pay within 1 year. Because as end of year one, this was the balance. At year two, this was the balance. This means the balance reduced. This means during year two, you made payment of what? 8844. So this is a liability that will be recorded in year one current liabilities. And this will be recorded as non-current liabilities in year one financial statement. This will be recorded under non-current liability of year two. And this amount will be recorded, the difference between these two, that will be recorded current liability in year two. In year three, at the end of year three, there will be no liability because all gone. In this question, so interest is like your mean initially we need to calculate the liability value using present value. Yeah. But subsequent mean at year end value, we need to add interest. We need to subtract the payment. The remaining amount will be recorded in balance sheet as a liability. But this liability should be divided into current and non-current. Non-current means the amount that we need to pay in more than 1 year. And current that we need to pay within 12 months mean within 1 year. So if at year two and this will be the liability remaining, this means the remaining you have paid in last 12 months. So the remaining is difference that is current liability. And this that you need to pay in more than 1 year that will be recorded as non-current liability mean to calculate liability of year one. We need to make a calculation for year two liability as well. Because the year two liability total, including current, non-current, will be non-current liability for year one. And the difference between year one year end liability and year two year end liability is called current liability. This is a little bit complicated. Can you understand this? Mean how the liability will be calculated. How the liability will be calculated. The balance brought forward mean initial balance. In that we need to add interest. We need to subtract the payment. So this will be the ending balance of liability. Ending means that will be recorded in balance sheet. But this balance should be divided into non-current liability and current liability. Non-current means that we need to pay in more than 1 year. And current that we need to pay within 1 year. In more than 1 year, this will be the amount. And the difference between these two amounts that is paid between year two and year one, so that will be called current liability. Yes, question. So my question, we gave the interest rate is also a discount rate, and that is also an interest. If the discount rate is not separately given, we will use interest rate as discount rate. That we have. Yeah, you covered. Check here. Where. Here. This. The discount rate is not given. We will use the borrowing rate as discount factor. This calculation, instead of this, we can make like this. Like year start of year one. Say we can say year one started at 1st of January. So we'll say the 1st January of year one, the present value of lease mean at start that was 31550. In that we need to add interest. In that we need to add interest at what date? 31st December year one. So interest will be added and interest was 1577. At same date we will make a payment of what? 10,000. So the remaining balance at 31st December will be what? 23127. But to bifurcate it into non-current and current liabilities, we need to calculate the next year ending balance as well. So at start of 1st January year two, this will be the opening balance. So PV of lease liability that will be 23127. In that we need to add interest at 31st December year two. So that interest will be 1156. Mean this interest will be calculated on this amount. This interest will be calculated on this amount. So what was the interest? 1156. And at 31st December, we will make a payment of what? 10,000. So we will be having closing balance of 14283. And without calculating this figure, we cannot bifurcate it into current and non-current liabilities. Now we can bifurcate. Mean 23127 is the year one balance sheet liability figure. But we need to convert it into non-current and current liabilities. So non-current liabilities will be 14283. That will be non-current liability. What will be the current liability? The difference between these two figures, 8844, that will be recorded as current liability. In similar manner, at year two, how much should be non-current liabilities? How much should be current liability? We need to calculate year three liability. That will be non-current liability for year two balance sheet. And the difference between non-current and current, the total will be current liability for balance sheet. The
Right, current liability.
sorry,
This non-current liability will be nil because we paid more.
obviously that will be nil. This is based on 3-year calculation. Might be there are 5 years calculation. So every year we need to calculate what is non-current, what is current, and for this we need to calculate lease liability of next year as well. Without calculating next year, we cannot convert into non-current. So examiner have asked, what will be the lease liability for year one? That you need to record in the financial statement. So we have calculated total. But how much is non-current, how much is current? For that, we need to calculate for next year as well. Is it fine? Either you can make a calculation like this. Balance plus interest less payments is equal to closing balance, remaining balance. Or you can make calculation like this is the PV of lease, add interest, less payment, so closing balance. So add next interest, payments, closing balance, add next interest, payments, closing balance. Can you understand this? Okay, now I'm changing this concept into two further parts. If we are making a payment at end of year, that is also called payments in arrears. Then we will calculate liability figure like this, what we have covered so far. Mean opening balance of lease liability plus interest minus payment. Opening balance plus interest minus payment. If we are making payment at start of the year, then we will calculate like this: opening balance minus payment, then add interest. Because interest will be calculated using the remaining balance. If we are making payment end of year, then first we will add interest in the opening balance of PV of a lease liability, and then we will deduct the payment. And if payments are being made at start of the year, then from the present value of lease liability, we will deduct the payment first, and then we'll calculate the interest and move towards closing balance. Is that?
Yes.
And this figure, after deducting a payment before adding interest, will be non-current liability for year one. Because the next payment will be of a
Next.
lease payment rather than interest. And in this, at year end, if we are making payment, so next year closing liability, including interest, was the non-current liability figure. But if we are making payment at start of the year, in that case, we need to make a separate column here, and we need to move this column before interest. And after deducting payment for year two, what is the liability amount that will be non-current liabilities, and the difference between these two will be current liability. How we're gonna discuss in a question later on. Can you understand this? Shall we move forward? Let's have a question. And how to calculate right of use asset, that we have already done. Mean lease liability present value, we need to calculate whatever the amount we have paid as direct cost or advance. So all will be included in asset value. The right of use of asset is measured using the cost model unless other measurement model is chosen. This means that the asset is measured at its initial cost less accumulated depreciation. Mean at year end we need to deduct depreciation. Depreciation, how depreciation will be calculated? If the ownership of asset is transferred to the lessee, in after lease time period, the ownership will be transferred to the lessee. At the end of lease term, then depreciation should be charged over the useful life of asset. We need to calculate depreciation using useful life of asset. And this information will be provided in the question whether the ownership will be transferred to the lessee or not. If ownership of the asset will not be transferred to the lessee, suppose lease time period is 5 years and asset useful life is 8 years, then we need to calculate depreciation using the shorter time period. That is what, 5 or 8? 5. So otherwise depreciation is charged over the shorter of the useful life and the lease term. Obviously, lease term will not be more than useful life of asset. It will always be lesser. This will not be the useful life of asset is 5 year and you have got that asset on lease for 9 years. No, if useful life is 5 year, what you will use for remaining 4 years. If the ownership of the asset will be transferred to the lessee, in that case, the useful life is what? The useful life is what? The life of the asset. If the ownership will not be transferred, then we need to use shorter time period. Shorter time period means lease term. Shorter time period means lease term. Mean we will depreciate using the lease term years, not the useful life. Illustration. Riyadh enters into an agreement to lease an asset. The term of the lease are as follows. Primary period is for 4 years. from 1st January 20x2 with a rental 2000 per annum payable on 31st December each year. Mean this is the payment that we need to make at the end of each year. 31st December mean end of each year, not start of year. The present value of lease payment is given in the question. This is initial lease, present value of lease liability. The interest rate implicit in the lease is 15%. This is interest rate given. We don't need discount factor because we don't need to calculate present value. What figure will be shown in the financial statement for the year ended 31st December 20x2? And lease starting from 1st January 20x2. And you need to calculate what will be the amount of asset at year end, what will be the non-current liability, what will be the current liability at year end, what will be the interest that will be charged to profit and loss account, and what will be the depreciation that will be charged to profit and loss account. Should I say good luck everybody for 5 minutes? Good luck. You need to calculate asset carrying value. For that, you need to calculate depreciation. You need to calculate interest for the year. You need to calculate non-current liability and current liability. Balance, opening balance plus interest minus payment is equal to closing balance. Opening balance is what? 5710. We need to calculate interest 15% of this value, 5710. Minus payment is what? 2000. So we can calculate closing balance of lease liability for year one. But we need to bifurcate to non-current and current, and for that we need to calculate closing balance of lease for year. They always say when the payment is made, beginning or end. Yeah, they will mention in the question. If there is no information, we'll assume end of year. What's the interest? 15% of 5710? 856.5, and we are making payment of how much? 2000.
Yes.
What's the remaining balance?
4566.
Sorry,
4566.
4566.
66.
So this is the closing balance. Is that at year end of X2? So now if we look at X3, so this 4566 will be the opening balance. What is 15% of 4566?
684.
Sorry,
684.
684. And we are making payment of 2000. What is the closing balance?
3250.
3250.
0.
So we are done with the liability part. Mean this will be non-current liability because we need to show 31st December 20x2 financial statement extract. And the difference between these two value, what is that?
Vendor liability. That is 1316.
1316.
16.
1316. Is that? So this will be current liability. Now we need to calculate depreciation. So depreciation amount will be the asset value that is 5710 divided by how many years? 4 years. So that is 1428 per annum. Is that? So statement of a financial position, asset, right to use asset value will be 5710 less accumulated depreciation of 1428. The carrying value will be how much? 4282? 4282?
4282.
Yeah. Under non-current liability, lease liability will be 3250. And under current liabilities, lease liability will be 1316. And statement of profit and loss account will be having a finance charge of what amount? 856. And we'll be having depreciation of 1482. Can you understand this? Financial statements extract. Financial statement extract. Is that? Now test your understanding. Two dynamic continue mean question one continue. There were 3 years, 10,000, 10,000, 15,000 payment. 31150. We calculated the present value of lease liability. Asset value was 34150. Prepare extract from dynamic financial statement in respect of the lease agreement for the year ended 31st December 20x1. That you can calculate by yourself. Even we have done something. Yeah. That mean this will be non-current liability. This will be current liability, 8844. The asset value will be 34550 and it will be depreciated over how many years? 3 years. Mean 34550 divided by 3 years, we can calculate depreciation. We have calculated the interest expense. We will calculate the depreciation, asset, non-current, current liabilities. We can show. Is it fine? Let's move forward. Short life and low value asset. The concept we covered for operating lease. Is also called no lease. Is also called short-term lease, where we need to show only one accounting. What is one accounting? Only expense will be recorded in profit and loss account. So short life and low value asset. If the lease is short term, mean less than 12 months, are of low value. Low value means minimum value. That low value is not defined by the standard, but normally if the amount of the asset is below $5,000, that will be considered low value. Then a simplified treatment is allowed. What is simplified treatment? One accounting. What is one accounting? Show expense in profit and loss. No asset, no liability, no depreciation. No need to calculate present value. Simplified treatment. For leases less than 12 months and low value asset. Low value asset mean asset value is below $5,000. In these cases, the lessee can choose to recognize the lease payment in profit or loss on a straight line basis, means same expense every year. No lease liability or right to use asset would therefore be recognized. Mean lessee will be having the option either to treat it as a lease, mean for accounting, or simplified treatment, mean one accounting. Obviously, what everybody prefer? Simplified. Because that is calculation involved so much complication, time as well. IFRS 16 leases does not specify a particular monetary amount below which an asset would be considered as low value. What is meant by low value asset? This is not defined by standard. But normally in practice, although the basis for conclusion indicate a value of $5,000 as a guide. And if the asset value is below $5,000, even if the lease is above 12 months, mean for 3 years, the lessee is having option either to count for accounting or simplified it. The standard also give the following example of low value asset, mean these assets are considered low value: tablets, small personal computers, laptops, not heavy computers, telephones. What is the expensive mobile phone in the world now? iPhone. What is the maximum value of iPhone? $100. $1,000 to $1,500 maximum. Not more than this. Initial model like a low memory, 1,000. If you're increasing memory, that will be maximum $1,500. Small item of furniture. So these will be considered low value items. Tablet, small personal computer, Telephone, small item of furniture. So lessee will be having option. Though lease contract is for more than 1 year, but lessee will be having option either to adopt simplified treatment, one accounting, or accounting as leases, four accounting. The assessment of whether an asset qualify as having low value must be made based on its value when new. If you have bought a old asset, you bought for 700. But if the new asset value is 6,000, so that will not be considered low value. In for the used asset, second-hand asset, the value will be based on new asset value. So the assessment of whether an asset qualifies as having a low value must be made based on its value when new. Therefore, a car would not qualify as a low value asset. You bought a car for $3,000 and you are treating it as simplified treatment. No, the new car value will be considered. You cannot say I have a car on lease for 3 years and its total value is $2,500. So I'm moving for simplified treatment, one accounting. No. Therefore, a car would not qualify as low value asset even if it was very old at the commencement of the lease. But these four type of asset you can treat as low value. You can treat them as low value. Tablet, small personal computer, telephone, small item in furniture, even if the lease time period is more than 1 year, you can adopt simplified treatment for these asset. Illustration. On 1st April 2006, Taggart acquired a telephone for its sale force under a 2-year lease agreement. What is asset? Telephone. Low value. The terms of the lease require an initial payment of 2,000, followed by two payments of 8,000 each on 31st March 20x7 and 31st March of 20x8. What is the total amount? What's the total amount? 8,000 plus 8,000 plus 2,000. 2,000 that you have initially paid, 8,000 that will pay at end of year 20x7, and 8,000 that you will pay at end of year 20x8. So all together 18,000 is the value. But what is the name of asset? Telephone. And standard allow you can treat them as the value. So it is on lessee choice. He can adopt simplified, he can adopt leasing. Show the impact of this lease arrangement on the financial statement of Taggart for the year ended 31st December 20x6. Year end is 31st December 20x6. What treatment you will adopt in your financial statement? If the lessee is moving towards simplified treatment because he is having a choice for telephone, then this lease is for 2 years. So divided by 2, 9 year will be the expense per year. What is the year end? 31st December. When you have entered into this lease contract, 1st April. This means for 31st December, you will record rental expense, statement of profit and loss, rental expense, how much? 9,000 multiplied by 9 by 12. What's that? Will be that? 675. But have you paid 6750 complete during the year? How much you have paid? The remaining 4750 you need to record as liability. Where? What? Rental payable. 4750. If you have paid all during the year till 31st December, there is no need to record this in balance sheet. There will be only one account. So for this lease, there is one accounting, that is rental expense. As some amount is still due to be paid, that we need to record as accrued expense. Can you understand this? Either if Taggart want, they can record it as a leases. You need to record the present value of lease liability that you need to calculate. For that, you must need a discount factor, and then you need interest rate. Payments is given, but as interest rate is not given, as discount factor is not given in this question, this means we can deal with simplified treatment because we are having option, because telephone, tablet, small furnitures, personal computers, they fall in low value asset. 4750, you're coming current liability. 4750 current liability. Because we have paid 2000. The interest for the year is 6750. And will we record the 8,000 payments? No, 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 no. Because we are not treating it as a leases. Okay. Every year we need to record rental expense only. As this rent expense is not paid during the year. So that's why we have recorded the like. If it was paid, there is only one accounting. Can you understand this?
Yes.
Mid-year entry into a lease. If a company enter into a lease pathway through the year, the depreciation and interest will need to be timed a portion, like we have time a portion interest. In the similar manner, depreciation will also be time a portion. For how many years, for how many months you have used the asset in current year, for that month depreciation will be charged. The liability table is likely to need extra column to split the table between pre and post payments. Mean to calculate liability, balance plus interest minus payment is equal to remaining amount. So there will be two column of interest. If you enter into the lease agreement during the year, whatever the interest time period for the current year, that will be recorded. The remaining will be recorded next. Shaheen Limited entered into an agreement to lease an item of plant on 1st October 2008. When lease starting? 1st October 2008. The lease required 4 annual payment of 200,000, 4-year lease. Each commencing on 1st October 2008. What does that mean? On the first date. Payments are being made at start of the year. Cash income. Payments are being made at start of the year. This means initial balance lease liability minus payment, then we need to add interest. The plant has a useful life of 4 years and is to be scrapped at the end of this period. The present value of lease payment is 700,000 that is given initial. The implicit interest rate is 10%. Prepare extract of the financial statement in respect of the lease asset for the year ending 31st March 2009. What's the year end? 31st March 20x9. And you entered into the lease contract on 1st of October 20x8 for first year, 6 months you have used. For first year, 6 months you have used. Okay. First, we can calculate asset value. Simple. Is that? What's the asset value? So statement of financial position under assets, right to use asset value will be what? What will be the value? 700,000. Because there is no other cost. Simply, no advance is given, no any direct cost is given initial, no dismantling cost is given, no need to deduct any incentive received, and less depreciation. For how many years? For how many years? 700,000 divided by how many years? 4 years. Multiply by
6.
October to March, 6 by 12. What's the amount? Carrying value is what?
700.
What's the carrying value?
612,500.
612,500. We need to know the value of non-current liability, lease liability, and current liability, lease liability. And for that, we need to move towards calculation. And for statement of profit and loss, we have calculated depreciation expense. That is 87,500. But we need to calculate what? Finance cost. Okay, let's move towards calculation. Balance, opening balance. Payment first. Then we need to make our total here. Out of this, we will add interest. And then we will calculate the remaining. So the opening balance we are having how much? That is 700,000. Payment we are being made how much? 200,000. So total is what? 500,000. Interest, how much? 10%. 10% of 500,000 is what? 50,000. But full 50,000 will be charged? No, half, 6 months. That will be what? 25,000. That will be what? 25,000. And remaining will be 525,000. 525,000. Is that? And if we look at the topic where we have covered this we are going to work on. The non-current liability will be found from this subtotal rather than here. Okay. Here we are now here. Okay. Now next year. 5 to 5,000. how much payment we are going to make. That is 200,000. The balance will become 325,000. The balance will become 325,000. And then we need to add interest. Where we add interest at end of year. And they have written down a line here. If mid-year entry into a lease, if a company enter into a lease part way through the year, the depreciation and interest will need to be part-time apportioned. The liability table that we are calculating is likely to need extra column to split the table between pre and post payment. Pre and post payment of what? Of interest. In this value, we need to make interest column here one more. Obviously, here there was no interest payment, but there will be some interest payment. The remaining 25,000 will be added here. Now this value will become 350,000. That will be your non-current liability. And the difference between these two values will be current liability. That will be what? 525 minus 350?
Oh, okay.
175,000. This is the crucial point in this question. You are entering into lease contract during the year. In that case, you need to check pre and post payment interest. And while calculating the non-current liability for current year, you need to include interest remaining in that amount. Otherwise, this figure will become 325. That will be 525. So we'll record what? 200,000 as current liability. No. So now non-current liability, we have calculated how much? 350,000. And current liability, we have calculated how much? 175,000. And what is the finance cost interest charge for the year? That is 25,000 till year end that we have paid. So this will be your answer. Oh, sorry. Can you understand this? If you can understand this, there is only one concept left and chapter finish. This was a bit tricky. Okay, let's move forward. What is sale and lease back concept? Sale and lease back concept. There is Mr. A and another Mr. B. Mr. A was having a asset. He was having a asset. He sold this asset to Mr. B. And then he asked Mr. B, transfer this asset on a lease to me. In the asset, still, who is using Mr. A? This is called sale and leaseback. And he sold the asset to Mr. B and then signed a contract of lease with Mr. B. Now Mr. B become lessor and Mr. A become lessee. Why Mr. A did that? After selling the asset to Mr. B, he got some money that he can invest somewhere. The asset he was using before, he's still using that asset. This is called sale and leaseback concept. Obviously, if he is selling asset to B, he's generating some profit as well. There will be some gain on sale of asset. How that gain should be recorded in financial statements of lessee Mr. A, this we need to learn in this concept. So first see what is sale and leaseback. If an entity, the seller, who is a lessee here, Mr. A, transfer an asset to another entity, Mr. B, the buyer, lessor, and then lessee leases it back from the buyer, Mr. B, the seller, Mr. A, lessee must assess whether the transfer should be accounted for as a sale. And on sale revenue, there is another accounting standard IFRS 15. If the sale is meeting the criteria of IFRS 15 revenue, then it will be considered as a sale and leaseback. If the sale part is not fulfilling IFRS 15 criteria of sale, then this will not be considered as sale and leaseback. For this purpose, the seller must apply IFRS 15 revenue from contract with the customer, means revenue means sale, to decide whether a performance obligation has been satisfied. This normally occurs when the buyer obtain control of the asset. Control of an asset refers to the ability to obtain substantially all of the remaining benefits. And if the control of asset was transferred from A to B, and then A arrange lease contract with B, then it is meeting the sale and leaseback criteria. If you haven't transferred the control of asset to B, in paper you have made this contract, then this is not meeting sale and leaseback. The FR sale proceed will only ever present the fair value of the asset. Meaning in question, the sale proceed or fair value of asset will be given, meaning the same thing, revenue. Transfer is not a sale. If the transfer is not a sale, then the seller, mean lessee, continue to recognize the transferred asset and will recognize a finance liability equal to the transfer proceed. Then he cannot treat it as a lease. The amount he received from Mr. B, he will record as a loan. But if the ownership control was transferred to Mr. B properly, it is fulfilling IFRS 15 sale criteria, revenue criteria. In that case, you need to record lease liability. If the transfer does not qualify as a sale, then the seller lessee must measure the right of use asset as a proportion of previous carrying amount. Mean in sale and lease back, we need to record this accounting entry. Whatever the cash you received through selling the asset, that will be debit. And now lease back, you have entered into the contract of leases. So right of use asset will be debit. And asset at the time of sale, what was his carrying value in your book should be credited, gone. Mean this will record asset has been sold, cash debit, asset credit. And for the lease, right of use asset debit, lease liability credit, And the difference between these debit credit will be called gain mean balancing figure. If the difference is coming on debit side, that will be loss. If the difference is coming on the credit side, that will be profit or gain.
This one we will write.
And we have recorded in one accounting entry the sale of asset, cash debit, asset credit, or asset removed. What was the carrying value in our asset before this sale and lease back transaction? Asset removed with that amount, we got the cash. And now according to lease contract, present value of lease liability credit, right of use asset debit. And if there is any mismatch between debit and credit, so that will be gain profit. Is that fine? But this value right to use the asset, this we need to calculate using a formula. What is the formula? I can write it. Lease liability mean present value of lease, that will be recorded here as well. The same amount, present value of lease divided by sale proceed mean what amount you received from the Mr. B by selling the asset, multiply by carrying value of asset, the value you used here. In this amount will be this one. Sale proceed will be cash and carrying value will be asset. Mean using this formula, we need to calculate right of use. And this formula is given here. The initial value of right of use asset is therefore lease liability divided by sale proceed multiplied by previous carrying. This means that the seller lessee will recognize a profit or loss based only on the right transfer to the buyer. The right retain will be eliminated from profit. And what does this mean? We will be able to understand by practice question. So in case of sale and lease back, the examiner will inform you, they will provide information whether it is meeting IFRS 15 criteria or not. In the question, they will write 2-3 lines about this. This is meeting criteria of IFRS 15. Now you need to calculate the amount of profit, or you need to record the accounting entry. Cash debit, right to use asset debit, asset carrying value credit, lease liability credit, and the difference balancing figure will be gain or profit credit. Can you break up? We can continue like that. Okay, take a break for 15 minutes. Coming up to the questions.
Is an user called the interactive. What? Mm-hmm. Oh, yeah, I will again. So let's see. My friend completely crystal. Let's go. So I carried my for the whole issues.
So probably it's kind of how it was it you know. Yeah, well, it's my chapter and we see just through it.
Okay. This is for all, but for me.
Yeah, all the yeah.
Oh, no.
It's hard to start with. Sure. Fridays.
Okay.
You got it.
Thank you so much.
Got it.
follow sports. Do you follow football or any sports?
F1.
Oh, you follow F1?
You follow F1?
A bit. Like I don't watch, but I know what's going on.
Yes.
No,
Yeah, he won.
yeah.
It's a good race.
I was so surprised. Like me and my friends stopped watching for a while because it got so boring match winning every day. So
Did
like
you stop last year?
no, I started actually the Abu Dhabi. That
2021.
yeah,
Okay.
that was the first race I ever watched.
It was amazing.
Yeah,
Yeah.
a bit sad but amazing.
Okay. You Lewis fan.
No, I just felt that you got robbed. Like I
You was wrong, man. Come on. You was wrong.
you don't support anybody. Like,
No, what? It's more fun if you hate someone that supports.
you know, but the thing is, I like McLaren, but then for a while it was pretty bad.
Yeah. Before the last win was like 2020 or something.
Yeah, and then like Mercedes, they were good, and then like after that season they became very bad. And like Russell's decent, but
Yeah.
I'm not like what I've heard of Hamilton before I started following F1 was like he finished first almost every time.
And yeah.
And now he's finishing seventh, eighth, sometimes 12th.
No, it's just Mercedes. After the 2021 changes. But next year, there'll be, oh, there'll be, yeah, 2026.
What is a
Yeah, 2026 autumn. They'll remove kids out. So you don't like it? Who do you like the most? Like not a fan, but you like the most. Like you would want to win.
definitely not right.
Okay. Like I can try
Oh, like a racing way, but personality.
seven. You can like someone for your.
No, because I like Ricardo, but the way he's performing is not great.
Yeah, I don't want him to retire like this. I want him to go like this, but he's going like that, you know? He can't go out like this. You gotta show something at least.
I mean, I might start following McLaren, I guess, this month, like, but they got a bit long. Actually, if you know stuff,
Yeah.
they wouldn't finish pretty high.
Yeah, but he didn't have the upgrades that he did.
No, it was something else. Something else happened to him.
Yeah, it's from wing got hit or something.
Yeah, that's why he took quit and he lost track this year. He was the top five, I think.
Yeah, but this game McLaren has like 9 upgrades, which was so much for after 6 races. But it's only to Lando. And Oscar had 4 upgrades or something. So next race they'll both be good. And next race, Imola, you should watch it. Because Ferrari and McLaren will have upgrades. So it's like a three-way battle. Red Bull. It's gonna be fun. I think it's 5 p.m. on a Sunday, so you'll have time probably.
So what do you watch?
It's like a random website. It's called stream.su.
Stream.sg.
Yeah, SU.
Yes.
It's like stream, streamed. You get me? Like stream and then ed, like the dot su.
Okay.
Yeah. So I like science and UK. Science from Ferrari and UK. The Asian guy, yeah.
Yeah.
I think. Have you heard of like rumors for science?
No, I mean, I know he's gonna go because Hamilton's coming.
Every day is different rumors. So for me, I don't know. I want to go to Red Bull for 1 year, then Audi the next year. Because he got an offer from Audi and Red Bull.
Oh, yeah, that would be
Yeah.
interesting.
For 1 year only, because I don't want him to be teammates with Max for too long. It's, I can't cheer for science if he's
No, I think it's the one science will be number one somewhere. He's always like under Leclerc.
Yeah.
Leclerc priority. Max will have a priority.
yeah. Then Audi he'll be prior.
Hopefully.
He'll be number one driver. Because in Audi they already have a driver, Hulkenberg.
Oh, definitely.
Yeah, 2026 is gonna be Hulkenberg. Then 2025 there's still kick, so it doesn't matter.
You don't watch one?
Not really, only the World Cup. I know nothing. I know it's fun, but like I can't get into it because there's too many names.
Yeah, I mean, you can start with UK, like the Premier League.
Yeah, even really, there's how many 20 players per team?
20 teams.
Yeah.
And then each has like, yeah,
Yeah, I know the big names, so like the famous one like
Haaland.
Rashford, Jude Bellingham,
Yeah.
like this. Like if you grew up with soccer, like football, it's fine. Like did you grow up in football, or did you just pick it
Not
up alone?
I started following football relatively late, not at
What age?
11.
11? 11 years old. Okay.
So, yeah, this is nice. 7, 7.
I wasn't really into sports that much. Just that fun.
I got in the opposite way of most people. Most people start watching and then get FIFA or like start playing on the Xbox.
Oh, you played and then
I played and then started.
I wasn't ready about you.
I got a gift of
okay, that was
in Xbox. You and my friend were playing FIFA. So like I got FIFA just like okay, let me see how there is like what games. And then like okay, so okay, I like this. When I started following it, like what's interesting.
okay. As I grew up, like I'm Filipino, so I'm surrounded by basketball, right?
Oh,
And I played 2K and all that. Heard like hear my friends talk about it, but I never got into it. I don't know why. It was never fun for me. Like fun. It's fun. There's drama. There's
have you watched? I mean, you would have watched like so like
yeah. I watched I think 4, 5, and 6. Season 4, 5, and 6.
I have watched. Yeah.
Okay, I think you should watch. I think season 5 or 4 are fun. It's 2021 and 2022. Season 6 was just Max Manning, so it's just like it was like them just playing.
Same.
They had 3 episodes in the season 6. They had like 3 episodes of Daniel because there was nothing happening. So there's like one episode of him like losing his seat and doing like media training or whatever. And then the next one is like him getting a seat. The next one is him getting taken like Liam Lawson, like outperforming him when he was injured. Did you know what happened though in 2023 for on Daniel's seat? He wasn't a driver.
Yeah, after a while it was like
The driver Nick DeVries he wasn't doing well, so they switched him, but he got injured and it's time Daniel and Liam Lawson. So if he does well this season, I think that's going to
it's the one who came on to replace somebody.
yeah.
He got more.
He,
Did he get on point?
he did not. He got booted off after like 10, 12 races.
Oh,
He was doing bad, but although he's like a F2 and Formula E champion.
like on one season, I think it was the end. He came on for one race, and the next season they put him on for down the world. Like when did he go for the 10 races with Giro?
Last year.
So I think the year before that, towards the end, one race he came on.
No, that wasn't. That was probably.
No, he got wins. I don't remember because somebody said
2022.
Yeah.
No, he wasn't there.
he didn't.
He was in Formula E in 2022.
I think he raced once, right?
I think you're talking about. It's
Because
on the top of my head.
Because I remember some rookie came on and then they were saying that somebody finished 21st out of the 20 minutes.
What?
Basically, he got points.
And the guy went through.
Somebody got points without factor like the race or playing.
Oh,
I remember right. He has one race that he Williams. He got none. In Germany.
Because I remember seeing things that somebody finished 21st in a 20-man championship.
I mean,
Because he got points, he kicked down everybody to get there.
yeah. It's the same this season. There's a reserve driver for Ferrari. He got 7 points, so he's like 16 in the channels. Yeah, he got points. Some people do. What's the next one? Centuries.
Okay. One was
Hmm?
the Mola quickly.
Yeah.
Leases. I'm not sure whether you people are comfortable with this chapter or not. I'm covering with a very slow pace so that you can absorb easily. I will recommend please cover recording of this chapter again for this class. Cover recording of this chapter again, then it will be fully absorbed. Okay. So concepts we have covered. Now we are moving towards practice, practice, practice. Test your understanding 3. On 1st January 20x4, start of year, Black sell an item of equipment to Fume for its fair value of 1 million. Is this 1 million? Sell an item of equipment to Fume for its fair value of 1 million. Mean this is the sale proceed. Mean fair value facet or the sale proceed mean same 1 million. The equipment had a carrying amount of 800,000 prior to the sale. Carrying value is given. This sale represent the satisfaction of performance obligation in accordance with IFRS 15 revenue from contract with the customers. Mean this sale meeting, fulfilling the criteria of IFRS 15. Black enter into a lease contract with the Fume for the right to use the equipment for the next 4 years. And after that, they entered into lease contract for the same asset, sale and lease back. Annual payment of 200,000 are due at the end of each year. The interest rate implicit is the lease is 9%. The present value of the annual lease payment is 650. The remaining useful life of the machine is much greater than the lease term. Explain how Blanc will account for the transaction on 1st January 20x4. How they will account for? They will debit what? Cash how much cash they are receiving? 1 million. They will debit right to use asset with how much? With how much? 650? No, we need to calculate using a formula. How?
That is
650 divided by sale proceed, that is 1 million, multiply by what?
800,000.
Carrying value, that is 800,000. So please give me the value.
20,000.
522.
520000.
Yeah.
Now we need to credit what asset at its carrying value, that is 800,000. We need to credit lease liability, that is with its present value 650,000. And we need to credit what gain or profit, that is balancing figure. Please give me that figure. This balancing figure.
70,000.
70,000 complete. Sure. Is that 70,000? Okay. Now, if you see, the asset carrying value was 800,000 in our book. We sold for 1 million. So sale proceed was 1 million. But its carrying value was 800,000. So we made a total profit of 200,000. But in a lessee book,
Yeah, 70.
the profit will be recorded with 70,000. In lessee book, the profit will be recorded for 70,000. What's the remaining? 130 that we didn't record in our book. That 130 is relating to retaining right. The right we didn't transfer to the lessor.
Oh,
Through sale, we transfer the right to the lessor for this profit. Now, can you read this line? This means that the seller, lessee, will recognize a profit or loss based on the right transfer to the lessor. So this is profit relating to right transferred. Mean we sold and then we get back the asset. We retained the asset. But through sale, we transfer our right a little bit, not a full. So in case of sale and lease back, what profit we should record in our financial statement relating to right transferred of the asset? The right retaining of the asset profit part will not be recorded into financial statement. Through this counting entry, the profit we are calculating, that is relating to right transferred. If examiner asks, what adjustment you are making to the total profit to calculate right transferred? So that adjustment is a right retaining. This is what adjustment to the profit. Because once in past paper, examiner have asked this in an MCQ. In the same scenario was there. An examiner asked, what was the adjustment to the profit relating to right transfer to the lessor? So total profit in sale was 200,000. But through sale and lease back, what profit we need to record into the financial statement? This. And that is relating to profit relating to right transfer to the lessor. The remaining is retaining right, profit relating to retaining right of the asset. Retaining right of asset. This 70,000 is profit relating to transferred right of asset. So this point, this means that the seller lessee will recognize a profit only on the right transfer to the lessor. Right transfer, when we made the sale, we transfer right, but for some time period, not for the complete life of the asset. And then we get the right back. Is it fine? This was the last concept. Now moving towards question. Question 4 we will discuss later on in future because that is relating to preparing financial statements, profit and loss, balance sheet. So question number 5. Question 5, there are MCQs. Number 1. An entity leases a computer with the legal title of the asset passing after 2 years. Title will be transferred. Ownership will be transferred. We will depreciate using the useful life. If ownership will not be transferred, shorter time period. Lease time and useful life. So the entity leases a computer with the legal title of the asset passing after 2 years. The entity usually depreciate computer over 3 years. The entity also leases a machine for 7 years, but legal title does not pass to the entity at the end of agreement. The entity usually depreciate machinery over 10 years. Over what period of time should the computer and machine be depreciated? Good luck, everyone. Title transfer based on useful life. What is useful life of title transferred asset? That is computer, that is 3 years. And title not transferred, the shorter time period.
So,
That is what? 7 years option. C. We have covered each and every line relating to concept. And those lines are applied. Number 2. An entity leases a motor vehicle. The present value of minimum lease payment is 27355 lease payment. And the rate implicit in the lease is 10% interest rate. The term of the lease required 3 annual rental to be paid of 10,000 each at the start of each year. At the start of each year. At the end of first year of lease, what amount will be shown for the lease liability? Non-current and current. In the company's statement of financial position under the heading of current liability and non-current liability. Good luck, everybody. Giving you 2 minutes. Payments made start of the year. There is no information whether you entered lease in during year or after year. This means complete interest you need to charge. Balance, payment, balance, interest, remaining at year end. At start, the balance was 27355. You made payment of how much? 10,000. The balance is what? 17355. Calculate interest 10%. 1735.5. And the remaining, add both these, 17355 plus 173. 19091. So next, this will be the 19091 balance. You made payment of 10,000. So remaining will be 9091 and 10% will be 909. And by adding this into this, 10,000 complete.
Yes.
So what will be your non-current liability? And what will be your current liability? What will be your non-current liability and what will be your current liability?
Non-current liabilities 10,000.
Option. So this will be your non-current liability
Yes.
A option.
because we are making payment at start of the year. If payment being made at end of the year, this will be non-current liability. So this will be non-current liability. And difference between this and this, that is 10,000. So that will be current liability option. Come on. Do you want to see why? Do you want to see why? Because of this.
Okay, payment
In case of
in
at year end payment, this will be non-current liability. But in case of start of year payments, this will be non-current liability, and difference between these two amounts will be current liability. Is that?
Yes.
Option A, option C, option B. Number 3, please. Good luck, everybody. Give me the correct answer. In where company cannot move towards single accounting. Mean they cannot choose between single and four accounting. Mean they must perform four accounting. Motor car with cost of 10,000 leased for 9 months. So less than 12 months, they can move for simplified. Telephone, small asset, they have a choice to move towards simplified. Motor car with original cost of 10,000. Current fair value of 500 lease for 24 months. Though you have leased on 500, but its cost new car is 10,000. So for this, you cannot adopt simplified treatment. And desk, small furniture.
Yes.
Question number 4. On 1st April 20x7, Chan sells an item of plant to finance company and lease it back for a period of 5 years. To finance company like bank. At the end of which the fair value of plant is estimated to be nil. Which of the following represent the correct accounting treatment for this transaction? Recognize the profit on disposal in the current year. Capitalize the new lease at the present value of the lease payment. Is that meeting sale and lease back criteria? If you are selling asset to finance company, whether the control of asset will be transferred to them, what bank will do with the asset? They will never take this asset because it's of no use for them. So this is not sale and leaseback. Spread the profit on disposal over 5 years, capitalize a new lease at the present value. No, this is not sale and leaseback. Ignore the disposal, treat the sale proceed as a financial liability. Revalue the plant to the value of the sale proceed, treat the sale proceed as financial liability. Revalue the plant of the value of the sale proceed, treat the sale proceed as financial liability. Revalue, why revalue? Option A, B is not there because it's not sale and lease back. What is option C? Ignore the disposal. There is no sale and lease back. Treat the sale proceed as financial liability. What the amount you have received from the bank, record it as liability as loan. There is no sale and lease back. You are using the asset, you are still using the asset. Whatever the amount you have received from the bank, that is a loan because you haven't transferred the control of asset to the bank. So there is no sale for IFRS 15. That's why ignore the disposal means sale. Okay. Okay. Number 5. CS acquired a machine via a lease agreement on 1st January 2007. The lease was for a 5-year term with rental 20,000 per year payable in arrears year end. 5-year time period. The present value of the lease rental was 80,000 and the annual interest rate implicit in the lease was 7.93%. Calculate the non-current liability and current liability figure for the 31st December 20x8, not 20x7, 20x8. So for 20x7, this will start with 80,000 and we need to add interest. What is the interest amount? 7.93%. What is 7.93% of 80,000?
344.
6344. Then we will make a payment of 20,000 and remaining balance will be what?
6634.
66344 and this will be 20x8 opening balance 66344. What is the interest? 7.93% of 66344.
61.
5261. We will make payment of 20,000. What is the remaining?
605.
51605. This is the total lease liability, but we need to bifurcate between non-current and current. That's why we need to calculate for next year as well. 51605. What is the interest rate? 7.93% on this amount.
405.
4092. We made payment of 20,000 every year. What is the balance? Come on.
35697.
35.
697.
697. So this will be non-current liability. Difference between these two. 15,000. 908. That will be current liability. So 35697 dollar And $15908 will be current liability. Done.
Yes, sir.
Chapter finish? No. If you pick it MCQs. Question number 10. Good luck, everybody. 110. Amount will appear under non-current liability. Non-current liability. In respect of this lease in the statement of financial position of the company at 31st December 20x6. They are not asking about total liability. They are not asking about even current liability. They are asking about non-current liability only. Only. You cannot calculate correct answers, slap yourself. You have wasted 2 hours. Come on. Give me answer. A, B, C, D. On 1st January 20x6, company entered into a contract for the right to use a machine for a 4-year period. The contract meets the definition of a lease under IFRS 16 leases. Company paid a deposit of 700,000 on the commencement of the lease on 1st January 20x6. They have made the payment. They have made the payment. Payments are being made at start of the year. Commencement of the lease on 1st January 20x6 and a further 3 installments 700,000 are payable annually in advance. The present value of the further lease payment was 1871100. on commencement of the lease. The interest rate implicit is the lease is 6%. The first payment they have already made. And after making that payment, they are having PV of lease. So at 1st January 20x6, they are having PV of lease. That is what? 1871100. We don't need to deduct the payment, though payment are being made at start of year, but we don't need to deduct the payment because payment already made. So we need to calculate interest 31st December x6. The interest is what? 6% of this amount. That is what?
That is 11.
One
So
one two two six six. 112266. Is that? 112266. What is the difference after making this payment? We need to add interest or subtract interest. By adding this, what is the amount?
19
1983.
3.
198366. So this is the closing liability at 31st December 20x6. But we need to see what is non-current and what is current in this amount.
Sir, the answer is 1983366.
198336 3366. So from this, we need to make a payment on what date? On 1st of January 20x7, we need to make a payment. How much? 700,000. And after making payment, what is the amount that will be non-current liability before the interest? What is that amount? 1283. 12833366. So this is your non-current liability. And they have asked for non-current liability. The first payment was already done. And if we make that chart, balance, payment, balance, interest, remaining. In this 1871100 is given after the payment here. We added interest, we got 19833. From that, we made payment of 7,000. So this amount 1283366. This is a non-current liability. And the difference between this amount and this amount will be current liability. That they haven't asked. Question triple one. Identify whether each of the following statement indicates or does not indicate that a contract contains a lease under IFRS 16 leases. We need to identify whether this is lease or not. Number one, the lease obtained. The lessee obtained substantially all of the economic benefit from use of the asset. So under lease, lessee obtain all of the economic benefit from use of the asset because the control is transferred to the lessee. Not lessor. Lessor have transferred to lessee. So who will use all the economic benefit of for the use of the asset? For use of the asset, lessee. Oh, this is lease.
It be like, and,
If it's using word lessee, this means it's a lease.
okay.
Without lease, there is no lessor, there is no lessee.
Okay.
Ownership in the asset is transferred at the end of lease term. No, no. Ownership in the asset is transferred at the end of lease term. Yes, there are chances even without transfer of ownership is also a lease. So this is indication of lease. You cannot say it's not lease. Even sale and lease back is a lease if it is meeting revenue criteria. The contract relate to an identifiable asset. Yes, in a lease, there should be identifiable asset against which you are obtaining lease. If it suits them to do so, the lessor can substitute an identical asset. No, he cannot substitute with an identical asset. The same asset will remain. Now, here is a concept, stores. Lessor and lessee. So lessor transfer an asset to the lessee and the lease term was for 5 years. After 3 years, lessor said, okay, now you can use my other asset. I want to use my asset by myself. This is not the case because the asset should remain same. If lessor says, please use an other asset for 15 days. After 15 days, I will provide you the same asset again. That is meeting a lease. Mean if there is any temporary identical asset usage, that will considered as a lease. But if he is replacing, substituting the original asset, that will not be a lease. Mean temporary replacement is considered as lease. But permanent replacement of asset will not be considered as lease. But temporary substitution is considered as lease. Question 112. What is the total charge to profit or loss in respect of this lease at 31st March 20x8? Profit or loss mean depreciation and interest. You need to calculate. Good luck, everybody. Or 31st March 20x8. And you are entering on 1st April 20x7. Very simple. P company entered into a contract to acquire the right to use an item of plant for a period of 3 years from 1st April 2027. The contract meets the definition of lease under IFRS 16. The present value of the future lease payments on commencement of the lease was 15,462,000, which is also the initial carrying amount of the right to use of the asset. I mean, this is the value of the asset as well. P company will also make a 3 rental payment of 6 million per annum, which are due to be paid in arrears at year end. This means interest will be calculated before payment. The useful life, the useful life of the plant is equal to the lease term. What is the lease term? How many payments they are going to make? Three years. There is no option to buy the asset at the end of the lease term. The interest rate is 8%. So depreciation will be 15462,000 divided by 3 years. What is depreciation? 5100. And what is the interest? So interest will be calculated on 15462,000 multiplied by 8%. And that is what? 124960. If we add both amount, this and this, is that 6390960? 6390960 by adding depreciation and interest. Interest is celebrated on what? On lease, present value of lease liability, opening balance.
Yes, it's 1, 2, 3, 6, 9, 6, 0.
Yeah, that's.
Yeah,
1, 2, 3,
6.
1, 2, 3,
6,960.
1, 2, 3, 6,960. Is that both together 6390960?
Yes.
So which option? Not A, not B, not C. Option D. Is that? Because payments in arrears, this means PV of lease initial plus interest less payment. So for the complete year, first year interest before payment, we can calculate. Even we don't need to move into that chart.
Why do we need to find the
Profit and loss. Depreciation will be charged in profit and loss account as well. Extract of profit and loss. What is the total charge to profit and loss? What will be the total charge to profit and loss? Depreciation plus interest. Though we need to deduct the cumulative depreciation from right to use, but we need to record depreciation in profit and loss as well.
Okay.
He's not asking about interest only. That's why option A is incorrect. 113, please. 113. At what amount does IFRS 16 lease require a lessee to measure a right of use asset acquired under a lease? Asset calculation is based on lease liability, yes, plus other direct cost, yes, plus incentive received. No, we need to deduct incentive received.
Yeah.
Lease liability less other direct cost, no, add other direct cost and add any advance. Lease liability plus direct cost, yes, plus advances less incentive received, yes. Lease liability minus direct cost, no, they should be added and advances should also be added and incentive should be deducted. 114. What is the carrying amount of the lease current liability? You need to calculate current liability for lease. At 30th September 20x4. Good luck. 2 minutes. In for the first year. This means you need to calculate for 2 years. And the difference between both the years remaining balance is current liability. Paid annually in arrears. This means interest should be charged before payment. Present value of lease liability given. Advance payment of 2 million. Do we need to do anything with 2 million? That has been given in advance? No, that will be ignored in calculation of lease liability. That will be added in calculation of asset. But in case of lease liability, that advance payment will be ignored. We need to make payment at end of year. So year to 30th September X4, the present value of lease liability started with double 2,745,000 plus interest. What is interest rate? 10%. That will be double 2,745,000 minus payment of how much payment we are making? 6 million? 6 million? What is the remaining balance? Give me the figure, please.
190.
Sorry,
190.
190,
19 500.
500. So at 30th September 20x of 5, 190,195,000 plus interest rate of 10%, 190,195,000 minus 6 million is the payment. So what is the amount?
1492
1492 or 82?
1450. 92
92
1450.
1450. What's the difference between these two amounts? That is current liability because this is non-current liability.
40
40
98
98
050.
050. This is current liability option B. 115, please. The objective of IFRS 16 leases is to prescribe the appropriate accounting treatment and required disclosure in relation to leases. Mean there should be 4 accounting and there should be detailed disclosure in the financial statements where notes to the accounts mean this is the 5th accounting. Asset, liability, depreciation, interest, and disclosure. Which two of the following are among the criteria set out in IFRS 16 for an arrangement to be classified as a lease? The lessee has a right to substantially all of the economic benefit from use of the asset. Yes. The lease term is for substantially all of the estimated economic life of the asset. The lease term is for substantially all of the estimated economic life of the asset. The agreement concern an identified asset which cannot be substituted. The lessor has the right to direct the use of the asset. No, he cannot direct the use of the asset. So this is wrong. Now, the lease term is for substantially all of the estimated economic life of the asset. The agreement concerns an identified asset which cannot be substituted, but temporarily it can be substituted. but temporarily it can be substituted. 116. Good luck, everybody. Select the total charge to the statement of profit or loss, depreciation and interest for the year ending 30th June 20x5 in respect of the right of use of factors using. Good luck, everybody. Depreciation and interest. Payment in arrears. Simple. Payment in arrears. Simple calculation. Check the value of asset. Is there any other payment except PV of a lease? Then add to the value of asset and calculate depreciation. And interest will be calculated on PV of lease. Because payments is in arrear mean after calculating interest payment will be made. Come on. So you can calculate the total amount in it. I can leave on you. Simple. This amount will be added to the asset cost. This is directly attributable cost. Mean direct initial direct cost paid should be added to the asset. Lease payment plus direct cost, that is total value of asset divided by its life. We can calculate depreciation. And payment in arrears, this means we need to calculate interest on lease liability. Because there is 8 years life.
It's then
Enter into agreement for the right to use an asset for a period of 8 years, shorter period. The useful life of the asset at the date is 10 years. The lease requires annual payment. The present value of the future lease on commencement of the lease is this. The internal rate is this, and attributable costs are this. There is no information. So what we will use? The shorter period.
Last option.
Option D. Okay, 117, please. 117. A sale and leaseback transaction involve the sale of an asset and the lease back of the same asset. If the arrangement meet IFRS 15, how should any profit on the sale be treated? Recognize the whole amount of profit immediately in profit or loss? No, only relating to the right transfer profit. Deferred profit and amortize over lease term? No. Recognize proportion relating to the right of asset retained? No. The right of asset transfer. That will be calculated using the accounting entry. The difference between total profit and that accounting entry profit is a profit relating to right retained. 118, I'm leaving on you. 119, we are covering. 119. On 1st January 2026, Platinum Company sold its head office property, which had a carrying amount of 7 million, to a financial institution for a total of 8 million. So cash received 8 million, sale proceed 8 million, carrying value 7 million. Total profit is 1 million, which was its fair value on that date. The transaction constituted a sale in accordance with IFRS 15. The contract of Platinum Company recognized the profit of 1 million in other income. They have recorded 1 million. Is that correct treatment or wrong? Wrong. You need to record profit relating to the right transfer only. Because 1 million is the complete profit. You need to subtract the profit relating to right retained. You know, Platinum Company immediately entered into an agreement for the right to use at head office for a period of 5 years. Under the term of the agreement, Platinum Company must make a payment of 600,000 per annum payable annually in arrears. The present value of the future lease payment is this on commencement of the lease, and the rate of interest implicit is the lease is 12%. What will be the adjustment required to account for the gain on sale of profit or loss for the year ended 31st December? And they have recorded this profit. By how much amount this profit should be reduced? They have not asked what profit they should record. They are asking about by how much amount this profit should be reduced. And that amount is profit retained. Profit relating to right of retained. This means we need to pass the accounting entry. Debit cash. How much we have received? 8 million. Debit right to use. That we need to calculate. How? Present value 2162850
Yes.
divided by sale proceed 8 million multiplied by carrying value 7 million. What's the figure? Come on. 1892 4944.
Four.
Credit asset with its carrying value that is 7 million. Credit lease liability that is 2162850 and credit balancing figure that is gain. How much is that?
30447.
730.
444.
This means this is relating to right transferred. How much adjustment is required in profit that they have recorded? So they have recorded 1 million.
Yeah. 26.
That is total. But they should record this 730,444. So what adjustment they need to make?
269.
269
556.
556.
6.
269 556. Calculate again, please.
Yeah.
Yes.
269 556. So this adjustment they need to make. And question 120, they have asked for this profit. mean, what is the amount of the gain that can be recognized in statement of profit and loss account, same sale and leaseback? And this is your homework. And question 121 is also your homework. Where is that? Where is that? That you can find from your it. So 118, 120, and 121. These are your homework. Chapter finish. See you again on Friday.
Thank you, sir.